Hey folks, CA Rachana Ranade here, and I welcome you all to episode number 3 of War, Waves and Winners. Just in case if you're like, what? Episode 3? Where are episode numbers 1 and 2? In that case, it means that you have still not subscribed to the channel and hit the bell icon. Just to give you some context, where did we leave episode 2 at? That's where we left episode 2. We had discussed about few stocks from the defense sector which had given positive returns when entire Nifty was not performing well. We also talked about a theme which was about capital markets, which also outperformed during that specific time frame. If you remember the 16 weeks time frame that we discussed in the previous episode. Just in case if you have not seen those videos, I'm going to put the link of those videos in the pinned comment and in the description box as well. But what will we cover in today's video? In today's video, we are going to talk about two stocks which can be definitely studied in the current scenario. We'll talk about what do these companies do. We'll understand about how does their order book look like, what is the management commentary, and also what are the key con call highlights. Video is going to be very informative, so keep on watching the video till the end. Spotting a trend in the market can be tough. Drawing the perfect trend line and spotting the breakout, that's even tougher. But what if AI could do it for you? In my upcoming webinar, I'll show you how to automatically generate trend lines and breakout signals using AI and TradingView. And the best part, you don't need to know coding. I'll teach you everything step by step, and I'll even give you the complete fine script code. The first batch got sold out with amazing feedback. Due to high demand and ongoing inquiries, I'm thrilled to announce batch 2. So join me live on 22nd March at 11 am for technical analysis using AI. Seats are limited, so enroll now and start using AI to level up your technical analysis. Now let's talk about the very first theme, which is defense. Now why defense? Because last two episodes we have been talking about the same fact that yes, the wars are currently, they're just increasing. The overall geopolitical tension is increasing. And if that be so, every country typically wants to spend more on defense. They want to ensure that they are very well equipped with whatever defense mechanism is required for protecting their own country, right? So number one, we are talking about rising geopolitical tensions. Number two, is government also increasing the order pipeline? Answer is yes. The defense budget allocation has also improved. So all in all, yes, orders are being given by the government related to defense. Question is, where are the orders being given? Are there orders for more of imports, or is the focus also there on domestic manufacturing? Answer is yes, government is also pushing for domestic manufacturing. We are talking about the Make in India theme. And not only we are talking about defense manufacturing for India, but we are also focusing more on how India could have an export opportunity as well in the field of defense. And ultimately, now if you see that in a space where everyone understands that yes, there will be a lot of orders, there are chances for exports as well, could this space get crowded? Answer, I feel, is more of no. Why? Because there are a lot of entry barriers in this field. There are a lot of technology related requirements. There are a lot of approvals that are required, so it's not very easy to get into this space, right? So if that be so, I hope defense as a space is absolutely clear. Now let's try and understand which could be the different companies in this space. What I have done is I have sorted these companies based on one filter where market capitalization is going to be at least 10,000 crores. Okay, and now for that, have a look at this. Now, if you see, you can see a whole list: MTAR, Zen, Garden Reach, HAL, BEL, Data Pattern, BDL. All these are defense and aerospace related companies, but who have a market cap of at least 10,000 crores. Okay. Now, if I were to sort based on quarterly sales growth, I'll just say sort from Z to A. And here you will see that MTAR has the highest sales growth. Second highest is Garden Reach. Third highest is Data Patterns. Okay, fair enough. I understand where is the sales growth highest. If I were to check based on profit growth, you can see again it is MTAR, Garden Reach. Third name has changed, and Zentech. So be it quarterly sales growth or profit growth, MTAR and Garden Reach both have been in this category in number 1 or 2. Now let's check price to earning. Price to earning, I'll ideally check for A to Z, lower to higher. And here you can see HAL is at the lowest PE ratio. The second lowest is Garden Reach again. Okay, MTAR has a very high PE ratio down there. Okay, but what about PEG? Let us quickly understand again. PEG, lower the better. MTAR has a minus 42 ka PEG. It means that the growth is not on a higher side. There is a slight degrowth in their earnings. Okay, then we talk about Zentech and ultimately Garden Reach again. Okay, so what did we understand? See, Garden Reach has the highest year on year quarterly sales growth, profit growth. PE is also very less, and PEG, very important, is less than 1. Okay, so let's first get started with Garden Reach. In the next section, we'll try and understand what does the company do. We'll talk about the order book, con call highlights, and a lot more. Now, first of all, let's understand what does the company do. As the name suggests, right? It's GRSE, Garden Reach Shipbuilders and Engineers. So it's primarily into what? Shipbuilding. But it is under the administrative control of Ministry of Defense, and they cater to the shipbuilding requirements of Indian Navy and Indian Coast Guard. Now they make different types of ships, be it something like frigates or frigates, something like corvettes, and a lot more types of ships, right? Now, as at 31st December 2025, their order book looks like 18,482 crores. That's the size of their order book. And when management was asked, how do you see your order book at the year end? They had mentioned that we feel that our order book could clock around 50,000 crore rupees. Now that translates to some additional 33,000 crore rupees. And where would this come from? And I found the answer in the management commentary, which said that company has been declared L1. Basically, L1 is like the lowest bidder for the NGC, or the Next Generation Corvettes project, which is a 5-ship contract valued at approximately 33,000 crores. So, as I mentioned, let's do a quick revision. Current order book as at 31st December, around 18,500, and additional 33,000 is this order that they are most likely to get, which is a contract for building 5 ships. Okay. In fact, management has also mentioned that they did deliver 5 warships during the current year, and 10 major shipbuilding projects are currently being executed. They also have other segments, something like ship repairs, portable steel bridges, naval weapon systems, and some more. See, all these are also important, right? It's not only about building a ship, there could be some certain ship repairs as well. So, all these things is what the company does. And talking about the capacity expansion, they are saying that currently their capacity allows 28 platforms under concurrent construction. So, basically, it's like 28 ships can be built at the same time. Okay, but they are saying that we will be enhancing this to 32 ships by the end of current year, or current year 2026. Okay, so by the year end, they should be able to expand their capacity to 32 ships or 32 platforms. Now let's also quickly understand about the con call highlights, because this one focuses on the financials. Company says that their Q3 was absolutely strong, and they are on track to achieve the best ever financial result this year. They also mentioned about the consistent execution, because they said we have 13 consecutive years of 13 consecutive quarters of year on year growth, and their revenue from operations for Q3 grew at 49% to 1896 crores. So always remember, growth is important. That's what is the basis that we have used to shortlist GRSE right now for our study. But it's not about one quarter growth. They are saying 13 consecutive quarters they have been able to grow, right? What does their revenue outlook look like? They are saying that for this whole current financial year, they are expecting a CAGR of 25 to 30%, and they feel that their peak year will be financial year 27, because they are saying that could be a major that could pump up the revenues to a great extent, because major projects like P-17 Alpha frigates, they will reach the delivery stage. They're also saying that there are certain upcoming tenders to the tune of 1,55,000 crore rupees, which is a part of the defense pipeline projects. And they are saying that there is a possibility that we may win a substantial chunk, somewhere around 70,000 crore rupees, including the P-17 Bravo frigate project. So all in all, what do we understand is, yes, the company, we did understand what does the company do. We checked out the order highlights, or the order book. We checked the con calls. We also understood what is the capex of the company. With this, I hope this you have understood the very first company. In the next section, we'll talk about the second theme. The second company that we are going to discuss is MTAR Technologies Limited. Of course, again, we have kept the same base: high sales growth, high profit growth, and a market cap of at least 10,000 crores. If you remember, I had told you that the PE for this company is on a higher side and PEG is negative. But when I tried to go into the details of the company, I found something interesting, something different. Okay, you will also understand that in the next 1 or 2 minutes. So keep on watching the video. What does MTAR do? It's a precision engineering company. Okay, precision engineering means what? They manufacture certain components which require extremely high precision, not even 1 millimeter here and there. Extremely high precision is required. And what do? They develop and manufacture mission critical high precision assemblies, components, ball screws for aerospace, nuclear energy, defense, and clean energy sectors. Oh my god. So if you now can visualize, okay, they are manufacturing some precision components, they'll develop that, they'll manufacture that. But in which industries are these precision components that they manufacture? Where are they going to be used? They're going to be used in industries like nuclear power plant, in hydrogen fuel cell systems, in rockets, in space programs, in defense equipments. So when I understood that, okay, this is like a big variety, I thought I should understand where does the revenue come from. So if they are selling their precision parts to even defense, to something like aerospace, to nuclear power plants, to hydrogen fuel system, what is the revenue breakup? And for that, when I checked their presentations, I found something interesting. Now have a look at this. If you see, clean energy civil nuclear power, okay, so they are making something, some product which is ultimately going to be related to civil nuclear power, so nuclear for power production, that contributes to only 3% of their revenue. Aerospace and defense, that contributes to only 13% of their revenue. So we did start this analysis based on aerospace and defense, but when I went inside and I tried to analyze more and more about the company, defense and aerospace is accounting only 13%. Where is a major chunk coming from? That's coming from clean energy, fuel cells, hydel, and others. That's 70%. I'm sure you might be like, okay, uh, clean energy, fuel cells, hydels, what does that mean? We are going to understand that. And balance others, products and others is 15%. So I hope you have understood what we need to really check is that 70%. What is this clean energy, fuel cells and all that? We will discuss about that in the next section. But before that, just a quick geographical breakup. As at 9 months ended FY26, 81% of the revenue comes from exports and just balance 19% comes from domestic sales. Now, next 3 minutes are extremely important, so pay 100% attention. What did we say? 70% of MTAR's revenue comes from clean energy, fuel cells, hydel, and others. Now, when I started reading about this, I was like, Acha, do they make fuel cells? Answer is no. MTAR does not make fuel cells. MTAR manufactures critical precision components. These components are used inside fuel cell stacks. So there is something like fuel cell stacks. Okay. So what I could imagine that where fuel cells will stack up. Okay. And these, the whatever are the precision components required inside that stacks, that is being made by MTAR. Then I thought, then who makes these fuel cells? Fuel cells are made by a lot of companies, but their major customer is Bloom Energy, which is US based. Now do you understand the reason why 81% for this company is export? Okay, because their primary customer is Bloom Energy, and Bloom Energy makes these solid oxide fuel cell systems. And where is this fuel cells going to be used? It is going to be used in data centers, in hospitals, and in industrial facilities. Okay, now you understand, okay, fuel cells are made by Bloom Energy and MTAR is going to make a critical component which is going to be used in that fuel cell stack. Okay. Now, third question I started asking myself is, what is the use of this fuel cell? Well, fuel cell generates electricity using hydrogen or natural gas. And it's like, acha, okay. So that fuel cell, why is it important? That is going to generate electricity using hydrogen or natural gas. And obvious advantage of this is going to be, it's going to be low emissions. It's going to be friendlier, comparatively nature friendlier. It is a quiet, it's pretty quiet. It is very reliable. It has an advantage of giving continuous power generation, and of course it is considered to be pretty much high in efficiency. So what are data centers trying to do right now? See, data centers typically require a lot of energy, and instead of using petrol or even diesel generators as backup energy, they are now trying to use this fuel cells to generate energy as either a primary power source or a backup power source. Now let's understand how this company fits not only into defense and aerospace theme, but also as an AI proxy play. You might be like, now from fuel cells, where is Rachana taking us to as an AI proxy play? Understand, if AI were to really boom, okay, one basic thing which is required is a data center, because loads and loads and loads of data will have to be stored where? In a data center. Now just to give you some context, A normal traditional data center typically may use 20 to 50 megawatts of energy. Okay. But if I'm talking about an AI data center, it can require 100 to 300 megawatts of energy. Okay. So is this like crazy high amount of energy? 5 to 6 times of energy is required. And that is the reason why AI data centers require continuous, reliable, and also a cleaner source of energy. Now, I hope you have understood all these things can properly stack up into what. Let's understand now quickly. Next 30 seconds are important. Bloom Energy manufactures those fuel cells. Why are those fuel cells required? Fuel cells are going to generate electricity from sources like what? Hydrogen. Are they going to be a cleaner source of energy? Yes. Could they be used as a primary source of energy? Yes. Could they be used as a power backup as a secondary source of energy? Yes. Now, these fuel cells, are they manufactured by MTAR? No. They are manufactured by Bloom Energy. What does MTAR manufacture? They manufacture critical components which are used in the hydrogen cell stack. Okay. Now, okay, we understood these cells are important cells. So please understand, these hydrogen cells will be used where? They'll be used mainly in data centers. Why? Because they require continuous energy. Correct. And I told you that AI data center will require way more energy as compared to a normal data center. Simple till here. And that is the reason why I told you that if AI were to boom, ideally this theme, which is like a proxy play, can also make a big difference. So just to build up, MTAR builds fuel cell stacks which are used by Bloom Energy. Bloom Energy will make those fuel cells, and their customers are going to be AI companies, something like Google, Microsoft, Amazon, Apple. I hope this entire theme gives you a nice picture of what does this company do, where does that 70% of their revenue actually come from. Oh, now that you know so much about all these fuel cells, the fuel cell stack, and a lot more, let's understand key pointers, something like order book, some highlights of the con call, and then you will understand that AI theme actually is fitting in here when you listen to their con call highlights. Okay, first things first. Order book, current order book as at 31st December stands at almost 2,400 crores, and the split looks something like this: 27% roughly clean energy, which is civil nuclear energy. So now we are talking about creating energy with nuclear power. The second highest, almost 50%, is clean energy, fuel cell, hydel and others. 13% from aerospace, other products, roughly 10%. Okay. Now, out of this 2,400 crores, roughly 1,368 crores to be precise, they received this order in the current quarter. Okay. Now, if I were to compare the order book of both the companies, be it MTAR and GRSE, with their respective sales, it would look something like this. If you see for MTAR, their order book stands at around 2,400 crores and TTM is around 750 crores. So that translates to an order book to revenue of roughly 3. And for Garden Reach also, if you check the numbers, you'll again understand that their order book to revenue again stands at around 3. Whenever we are saying that order book to revenue is a higher number, it shows that the revenue visibility is absolutely in place, right? Now, coming to the management commentary, management has very clearly mentioned that they had the highest everly quarterly revenue in Q3. They also mentioned that margins are expected to improve in the coming quarters, and they are also mentioning that with higher operating leverage and a favorable shift in the product mix, because overall they are expecting volume based production, all these things will lead to higher margins in the coming quarters as well. Talking about capacity expansion, they are saying that to meet surging demand from AI driven data centers, very clearly in their con call highlights they have mentioned, to meet surging demand from AI data driven centers, MTAR is scaling up fuel cell capacity to 12,000 units by March 26, 20,000 by December 26, and 30,000 units by subsequent year. And now you know they don't manufacture that fuel cell but the stacks, right? Plus, they have also given the guidance for FY26. They are mentioning that revenue growth is expected at 30 to 35%, and they expect the revenue to surpass 900 crores. FY27 outlook they have given at 50% revenue growth. Margins they are targeting 21% plus or minus 1% EBITDA margin for FY26. By the way, current TTM EBITDA margin is at around 19%. So they are mentioning that yes, their margins can substantially improve, mainly due to what? Operating leverage. And we also talked about their order book, which they expect to close at around 2,800 crores. So all in all, I hope you've understood about about this company, which just from a surface level looks like a defense or aerospace company, but this company also has a very nice AI proxy play inbuilt into this. So this is it about the episode 3 of War Waves and Winners. If you feel that I should make a separate series, do let me know your thoughts in the comment section below. Would love to make separate series as well. If you did like this entire series, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.